Welcome back. After a week of some serious whiplash moves across stocks, metals, and crypto, the market is really standing on a knife's edge. Today, we're going to cut through all that noise and try to figure out, is this a moment of danger, or is there a hidden opportunity here? All right, so here's our game plan. We'll start with a big picture view of what's going on. Then, we'll dive deep into the U.S. stock market, which has been surprisingly resilient. After that, we'll dissect that sudden, sharp plunge in gold and silver. And we'll definitely check the pulse of the crypto markets. And finally, we're going to connect all the dots to give you a clear, strategic playbook.
You know, the main theme right now is that the market seems to have a split personality. We're seeing intense pressure on some assets, while others are showing surprising strength. And navigating that split, well, that's the key to managing risk and finding some real opportunity.
So this is the core question we're trying to answer today. In this chaotic market, where can we actually find some stability? And more importantly, where are the trapdoors we need to watch out for? That's exactly what we're here to figure out.
Okay, let's start our search for that stable foundation by looking at the U.S. stock market. Because despite all the short-term static you're hearing, the long-term picture here, it looks remarkably different from the other asset classes we're about to cover.
So here's the crucial point. Yeah, we've got some short-term choppiness from things like government shutdown talks and geopolitical tensions affecting the Dow and the Nasdaq, but the long-term outlook for U.S. equities, it still looks pretty positive, driven by strong corporate earnings and innovation. Now, because of that short-term noise, rushing in all at once probably isn't the wisest move. A much smarter strategy is to consider staged, gradual entries. That way you can navigate the volatility while still positioning for that long-term strength.
Now, let's completely shift gears and talk about precious metals, where the story is, well, it's the complete opposite. Gold and silver basically just fell off a cliff, and this is a moment that calls for extreme caution, not for bargain hunting. This is the classic question, isn't it? You see a huge drop in price, and your first instinct is to buy the dip. But as we're about to see, that instinct can be a very, very dangerous trap. And this slide explains exactly why that's so dangerous. It's a concept called a false rally. Sometimes you'll hear it called a dead cat bounce. What happens is, after a big drop, you get this quick, hopeful little bounce. It feels like the bottom is in, right? But more often than not, it's just a trap that sucks in buyers before the price rolls over and hits brand new lows.
And look, this isn't just a theory. It's a pattern we've seen time and time again. Just look at this case study for gold back in 2020. After a huge sell-off, it staged this deceptive 8% bounce in less than a week. It looked for all the world like the selling was over, but it was a classic bull trap. The price just continued to fall, making that bounce a really costly mistake for anyone who jumped in. And 2020 wasn't a fluke. If we rewind all the way to the big 2011 peak for precious metals, guess what? We see the exact same pattern. A sharp break, a couple of failed attempts to rally back, and then a much, much deeper decline. The market definitely has a memory for this kind of thing. And here's the hard data to back it up. If you look at all the historical times where gold has had a strong rally for weeks and then a sharp drop, just like we've seen, the average return over the next 2 months has been negative 8.75%. History is screaming at us that patience is rewarded and that trying to catch this falling knife is a really low probability bet. So the strategy for gold and silver becomes crystal clear. The risk of one of these false rallies is just too high right now. The smart move, the prudent approach, is to wait on the sidelines until the market gives you a clear signal that a real, durable bottom has actually formed. Rushing in here could be a very expensive mistake.
This shift away from risk, we're seeing it play out in our next asset class too, cryptocurrencies. The recent weakness here really confirms this broader market theme of caution. And the technical picture here is, well, it's pretty ugly. Looking at the major coins, we're seeing a coordinated breakdown. Bitcoin was stopped cold at a key resistance level it absolutely needed to clear. Ethereum was sharply rejected from that psychologically important 4115 area, and XRP just couldn't hold its gains. This isn't just one coin having a bad day. This is a sector-wide failure. So, the conclusion is pretty simple. The technical outlook for crypto is negative. All the lights are flashing red, and based on this data, trying to open a new long position right now is, well, it's a high-risk gamble. Okay, we've covered stocks, metals, and crypto. So let's pull all of this together into a clear strategy. Right now, it really all boils down to a choice between two very distinct paths. And this slide lays out those two paths perfectly.
On one side, you've got the path of patience, holding cash, preserving your capital, and just waiting for the dust to settle in metals and crypto. On the other side, you've got the path of opportunity, for long-term investors to begin carefully averaging into the U.S. stock market, accepting the short-term bumps for that long-term potential.
But no matter which path you lean towards, this right here is the single most important principle to remember. For any asset that is in a clear downtrend, and right now that's gold, silver, and crypto, you must wait for confirmation. Don't predict, don't guess. Wait for the market to prove to you that the selling is actually over.
And that leaves us with a final question for you to think about. In a conflicted market, just like this one, what is your greatest asset? Is it the patience to wait on the sidelines, or is it the decisiveness to seize an opportunity even when there's so much uncertainty? Thanks so much for joining our analysis. We really appreciate your subscription and your likes.